Ladies and gentlemen, welcome back to the High Performance Trader. I'm Joshua Salvetti, the YouTube channel that collects reliable data and builds profitable day trading systems based off that data. And today I'm going to break down once again the importance of the EMA cloud. And more importantly, more specifically, I want to break down the 20 EMA. The 20 EMA is a phenomenal tool to help us identify opportunity in the stock market. And see, we need to be like water. Bruce Lee says be like water. What's he talking about? Well, water is formless, okay? Water can adapt to any environment that it's in. Whether it's in an extremely unstructured, a crazy environment, or it's in a cup, right? Like this little SpongeBob cup. See, water is going to form to its surroundings. This is how we need to be in the market. We need to be formless. We need to be able to objectively identify opportunity in a harmonious way. Okay? We need to be one with the market. And today I'm going to show you how we use the EMA cloud to do this exactly. Okay? So I'm going to post in the description below a link that's going to allow you to upload the EMA cloud indicator for thinkorswim. So if you trade with thinkorswim, you do not have the EMA cloud indicator. I'm going to give that to you. Click the link below, upload it manually. Now, the reason why I want to break this down is because the market has been a very, very unstructured environment lately. We literally have tariffs, we have trade deals, we have global markets crashing. We got a lot of indecision in the stock market, which is making it very, at least for the last week, choppy. Okay, the market has not had much follow through. It's been, very indecisive. So I want to give you another way to view opportunity. I want to show you a different way to use the EMA cloud. So let's break it down. So before we go any further, as a matter of fact, guys, go ahead, click that first link below in my description. It's going to bring you to my website where you are going to get a 5-minute breakdown of our edge, our strategy, and how we use it to get in and out of the market. This is the HPT cross. This is what I collect data on every single week, and I send out weekly data reports on this strategy. It's a phenomenal approach. Make sure you put your first, last name, email in, and I will send these to you for free on a weekly basis, right? This is a phenomenal resource, and there's more information on the Discord if this is something that you would be interested in joining. Okay, we have a phenomenal team. We're putting in tons of work each and every single day. So go ahead, get involved with a strong army that's going to show you how to execute appropriately. Okay, so without further ado, let's break this down. So if I whip out the Discord, you're going to see over here at 10:50, I'm hopping in the market short. I want to show you guys how we used the EMA cloud to identify this opportunity. Okay, so if I pull up thinkorswim, I want to show you guys every single day I have the same exact approach. Okay, the first thing I do, well, let's start here. Now, regardless of the strategy, okay, I don't care if it's you trade trend lines, if you trade breakouts, if you trade support, resistance, supply and demand. All strategies revolve around one philosophy. Okay? And that philosophy is identify what the banks are doing and then adapt to what the banks are doing. This is identify how they're moving price and then capitalizing on it. See, we can't move price, but we need price to move for us to make money, right? We could agree on that. Now, since we can't move price, we need to objectively learn how to identify who is in control of price, whether it be buyers or sellers. How do we do this? Well, we do this by identifying pit numbers. Pit numbers are the previous day high, low, open, and close. Okay, this is a very simple way to identify what the banks are doing. Josh, why? Well, the pit numbers have all the volume. Okay, open, tons of volume. The low, tons of volume. The high, tons of volume. The close, even more volume. So if I were to just take my cursor and draw a box around the previous day price action, once again, it's going to give you a little more context of what you're actually looking at, okay? See, we need to spot what the banks are doing. Therefore, we must learn where they're at and why they're making the decisions that they are. So every day in the pre-market plan, I break down a bullish and bearish scenario, right? Where I basically go, hey, if and when large money does this, I will then target XYZ. And if and when they don't do this, I will target the other level, okay? So the day we're talking about is right here. You could see I'm highlighting previous day high, and I'm going, whoever controls this level, I'm looking to trade with, okay? There's a bullish scenario, there is a bearish scenario, and whomever controls it, I'm going to trade with. I do this each and every single day. Now, once again, regardless of the strategy you're using, it's the philosophy. It's the way you view it. Once again, we need to be like water. So we need to be able to identify what the banks are doing and then act appropriately, okay? So the market opens. Now, once the market opens, I then identify open print, okay? Now, let me just get rid of this here real quick. So now I need to figure out who has the ball. Does the red team have the ball, or does the green team have the ball? Okay, now we're getting a red EMA cloud. This is what I like to see from a bearish standpoint. This is why I love the EMA cloud so much. See, the EMA cloud is going to paint the picture for me. If it's red, I'm going to lean towards the selling side. If it's green, I'm going to lead towards the buying side. This keeps me objectively viewing price. See, in one of my last YouTube videos, I was talking about perceptual distortion, how our mind likes to play tricks on us. This is why we need to use tools, okay? If the market's an ocean, the EMA cloud is our boat. It guides us. It's literally our life jacket, keeping us from drowning, okay? We need to learn to use these tools. So price comes into the open and rejects very hard. So once I see something like this, I start thinking, okay, sellers are clearly in control. Notice how price comes right up to open print, rejects, right? This is the market telling me that large money just owned open print, okay? If this is the critical level and the banks just ripped into it and price rejected, is that bullish? No, this is bearish. Now I need to spot my entry, okay? So price comes down, and we get our candle that rallies back up into the candle that was literally just disrespected, okay? So you guys see this green candle that was just ignored off the open. So now price rejects, comes back into it, and now we're selling off. I entered the market short once price came into this level and started to reject it, okay? So once again, I'm going, if sellers can hold this zone, which they did, and the outside of the EMA cloud, which is the 20 EMA, I am going to get into the market short. That's exactly what happened. We entered the market short, targeting end of day. It was about a 10-minute, 15-minute trade, in, out. Okay, so once again, using the EMA cloud to objectively understand who's in control of the critical level. Okay, cool. Then once price comes into end of day, look at the volume that comes into the market, right? See, for us to make money, we have to understand what the banks are doing. For the banks to make money, they need to take our orders, right? It's a zero-sum game, meaning if someone loses, someone's winning. If someone's winning, someone's losing, okay? It's a seesaw, okay? When you lose money, the banks make money. When you make money, the banks lose money, okay? So it's an everlasting, ever-going battle between us and the banks. But it doesn't need to be a battle from our sense. We just need to learn what they're doing. And you'll see prices coming down to end of day. Buyers, banks are showing up extremely strong. Cool. So price starts to rally to the upside. And this can be very frustrating, at least for me, because I struggle with getting into long plays here because there's literally no pullbacks. See, until the market gives me a pullback, I really can't get in it because it's not a repeatable approach. If I'm here to make consistent money, my approach has to be consistent. Yes, I can adapt to market conditions. I can maybe drop down to the 2-minute. But until the 5-minute looks good for me, I'm not going to do that, right? I'm going to stay patient and wait for the market to give me something. So you'll see here, we literally got, what is this, about an $8 move to the upside before we finally got some red candles. Now, for me to get into the market, I need that red bar to get ignored. And you'll see this red bar here gets ignored. So what do? I draw a box around it, okay? Now, the market's very extended at this point, so I'm not just going to hop in after that RBI, which would have worked, okay? Even if I hopped in right here, that still would have been a profitable trade as long as I kept my stop below the RBI. But, once again, I'm not trying to feel forced. I don't want to just make it happen. I'm just going to watch the EMA cloud. So if I whip out the Discord, let's see exactly. I called out the long play right here at 12:43 a.m., right, or p.m. And what am I looking at? Price is coming into the EMA cloud, hitting it like a wall, okay? And what is this telling me? This is telling me that the banks, buyers, are in control. They're showing strength. Once again, this is why the EMA cloud is so effective. So I've drawn my box around the RBI. Price comes into the EMA cloud. Look how bearish this looks right here. If I were to take away the EMA cloud right here, we would be talking a different story, okay? This looks bearish. Am I wrong? We literally had a rejection from high of day, and now we're getting selling, right? From a trader standpoint, it looks like buyers just lost the highs. We're extremely extended from the open. There's no way it could go higher. This is how I used to think. But if I whip out that EMA cloud, put it back onto my chart, I know, hey, until that 20 breaks, I gotta stay bullish. I have to. And we're still in the red bar ignored area of interest, okay? This is what I call an area of interest. Anytime you get an RBI or a GBI, draw a box around it, guys. This is the area of interest. You want to make plays out of this zone. So once price came into the EMA cloud, and then I got another red bar ignored, that's where I hopped in the market long, targeting my upside target. So once again, guys, the market has been extremely just ruthless, okay? It's ripping, it's knifing, it's smoking a lot of traders. But we need to rely on our ability to remain like water, okay? We have the tools. We know how to trade. We know how to spot and identify opportunity in what the banks are doing, okay? Use the EMA cloud. Use the 20. Use our 3-step approach and find yourself trading with way more confidence. I'm Joshua Salvetti. Click the links below to join the team, and I'll see you in the next lesson.